Afternoon, everyone. Good afternoon. Hopefully, everybody is having a good day today. Welcome to At the Buzzer, our market recap. Let me know if you can hear me, if you can see me well, and we'll get started in just a few minutes. And also, let me know how you did in the chat. Were you up on the day, down on the day? Anything you learned for the day? Good volume. Thank you, Hoop. Good afternoon, G-Man. Tachi, happy Monday. Dan Trader, always good to see you. Louis with one lot. I like that name. How are you doing? Pete, Elvis, JB, great filibuster. Hit a game winner today at the buzzer. Yeah, that close was an at the buzzer close, right? We had a 70-point rally in the NASDAQ in the last 5 minutes or so. That's what you call at the buzzer for sure. Joe Black, love the way Jay stays on point. Thank you, Joe. That's good feedback. I appreciate that. G-Man, Rob Trades, Courtney, Green on RTY, Casey, crappier and then crappier. Try to figure out what happened. I know I traded a few different accounts today. I took some losses, a DLL and a Topstep Combine overnight, trying to buy gold, looking for new all-time highs. Today, during the daytime session, was a little bit different. Actually bought Crude and had a pretty decent day. I know what I did wrong in gold, and it was really just not a lot of room to the upside for the trade that I was looking for. So I have to make an adjustment there. Coach Hoop, Chuck and Duck. Lito with the hearts. Love you too, Lito. I planned on buying 55.75 today and took a ride to 56.25. Nice. All right. Well, welcome to and there's that question again, John Brantley. So welcome to At the Buzzer, our market recap. If this is your first time here, very nice to meet you. I am Coach Jay. If you join this segment in Discord, you know that Coach Paul is usually with me as well. Coach Paul and I did a test today of everything just to make sure everything went well on the stream. I gave it an A+ from our test. So Coach Paul will be on tomorrow joining me for At the Buzzer. I can't wait to have him back on. Coach Paul has a ton of information, and especially what we have going on this week. I want Coach Paul's feedback on some of the stuff, the Jackson Hole, and what we have coming up later in the week. So we will have Coach Paul tomorrow. Can't wait to have him here. I think he is hanging out in the chat. So if you have any questions for Coach Paul, he will be there. So the goal of this segment is to review what happened in the markets for the day. Of course, we're going to talk about the 4 major markets that everyone trades at Topstep: crude oil, gold, NASDAQ, and ES. But we may talk about some markets that you have not traded before. I think our goal as traders is to identify opportunity and see how we could have taken advantage of those opportunities while managing our risk. With that being said, the top percentage movers on the day. To the downside, all the energies. The energy was pretty low today. RBOB, gasoline futures, down 1.95%. Crude oil, down 2.26%. And heating oil, all energy markets, the biggest downside movers. Heating oil, our biggest mover, down 2.59%. To the upside, we have lean hogs, up 2.33%. Soybean meal, up 2.85%. And nat gas, up 4.99% for our biggest percentage mover to the upside. We did see pretty big moves in the equities as well, and we are going to start with that. The NASDAQ up 1.28%. Coach Paul, don't fill up your tank yet with RBOB futures being down. Let's start with the NASDAQ. Pretty quiet news week this week. Not a lot on the calendar until later in the week. We know we have the Jackson Hole starting on Wednesday. We have jobless claims out on Thursday. But outside of that, it's going to be a pretty slow news week, which might make sense for the price action that we're seeing. Not a lot of heavy headlines to cause market movements. And we talk about it all the time. The market doesn't really need a reason to go up, right? There's a bunch of people waiting on the sideline to put money into these markets. And that's what we're seeing. Bit better volume than we've had over the past couple of days, but still kind of this low volume float. Here's a 30-minute chart on the NASDAQ. You have these moving averages up. We have the 20, the 50, and the 200. The 20 and the 50 being well above that 200 moving average. They were kind of, braided around each other over the last 3 or so days, but we're starting to see those kind of spread out again, right? The 20 back above the 50, starting to trend up here. And maybe this is the run we're seeing to 20,000, right? 20,000 is now less than a half of a daily ATR away, right? We're only 150 points away. The high of the NASDAQ today was 19,866. So when 20K, right? It's right there. But the NASDAQ on a higher time frame chart does still have this gap. And I'm looking at a gap down from July 23rd. So July 23rd into the close of July 23rd session into what was July 24th. We had a gap down. The high of that gap is 19,945. The low is 19,882, we'll call it. We have not traded those prices since we created that gap, right? It's been a sell-off pretty much, and today we closed pretty close to it, right? We haven't tested it yet. And then when we look at the ES, we'll see that the ES has already closed this gap. So very interesting to see what happens. A little bit of a divergence. The NASDAQ has some catch up to do with the ES. So I will be watching this range. Again, the low of that gap is 19,882. The high is 19,945, we'll call it. So above that, obviously 19,945 is only 55 points away from 20K. So if we can get above that gap, hold it as a support, why not 20K right after that? Pretty crazy close in the NASDAQ today. We'll go down to a 3-minute chart real quick. I'm going to take off the moving averages. We kind of see that they're trending up. I want to put on these Topstep daily levels. If you are trading on Topstep X, you have access to these levels. Throw them on your charts. Interesting areas that the market trades around. Of course, they're not trade signals, right? We're not saying, hey, when we get to this level, you should buy or sell, but they're areas of opportunity. And if it fits within your trading plan, go ahead and take your shots and manage your risk. The one thing I do want to point out, and I told you guys I would do a little bit of this. We went really in depth the first week with Quant Tower and Delta analysis and all this other stuff. And I told you guys that you could do similar analysis with just a volume candle. Here's a 3-minute chart, and here is what I would consider a volume anomaly, right? And I'll just say it that way, a volume anomaly. This is 4 o'clock Eastern time. During the London session, we see this volume spike here, and the prices are 19,575 at the highs, 19,538 at the lows. And I'm calling it an anomaly because of all of the volume relative to that time frame, right? Everything else we see is pretty low volume. So maybe just an interesting area, like why did that amount of volume happen at that time of the day when it's normally pretty low volume? I'm gonna establish levels from that, and what we see is when we start to trade in that regular trading hour session, we come back down, check these prices, right? Check this volume anomaly. This was selling in here. We come back, check the prices again. Are the sellers still there? They aren't. Once we get a close above that, a really nice trend up for the rest of the day. Coach Paul, I love this trade. Yeah, man. We see it happen often, right? When we pick out those anomalies, a lot of times they will present opportunities, whether that's an opportunity to buy or sell when we get down there. It's, hey, how does the market react when we get back down to these sellers? Again, that range was 19,534 to 19,575. That's on a 3-minute chart. Depending on the time frame that you use, it's going to be a little bit different, right? Maybe we could have included this candle in the Europe session where it made the low of 19,525. Either way, we can see we came down, checked that zone. Like Dakota says all the time, it's a zone. There's no perfect levels. But that presented a pretty nice area to trade from this morning. We took some house account trades in the NASDAQ today, and I think today was kind of a tale of two trades, right? Where a lot of times we say, hey, it was a range-bound day and it provided opportunity for range-bound traders, or it was a trend day, and if you're a range-bound trader, it was difficult. This was a day that gave us both. The first hour of trade was a range-bound trade. You'll hear Hogue mention this all the time, where he says, the market is opening in range and in value from the prior session, and better trade location is going to happen later on in the day. Today was the perfect example of that if you're a trend trader. The trade that we took in the house account, I believe we were short from right around 19,618 to 19,610 to 19,618. And what the guys were seeing was, this looks like the high of a range. We have the opening range. I'm looking at a 3-minute opening range. 3-minute opening range. The high of that 3-minute opening range was 19,615. And if I'm looking at this, I'm not seeing any volume push us above that level, right? I'm going to frame out the range. I'm going to attach an anchored VWAP to that as well. And the VWAP stayed in the range, right? So these guys are looking at shorts up here. Really great trade. I think Dakota took it 2 or 3 times. And, we were short in the house account where on a day where the market rallied 300 points and made money, right? So you don't have to get the market direction right in order to make money. You just have to trade right? These guys identified a range and said, hey, we're going to trade the range until it breaks. And all to the short side, we're able to make money. Identified that, hey, maybe this isn't a trend, so we should take profits. And I think it was a really well-managed trade, which we needed in a house account, right? Get us back on the right side of profits. With that being said, after the initial balance is set, you'll hear Hogue talk about the initial balance all the time. And what the initial balance is the first hour of trade. Initial balance high in the NASDAQ, and that's going to be 8:30 to 9:30 Central. So you want to figure out that hour, right? The high and the low of that candle. The high was let's call it 19,625. Yep, 19,625 was the high. And then the low was this 19,525. So about 100-point initial balance. You see I have it marked out there. And then once we got to close outside that initial balance, it was supported for the rest of the day. Now, it was about, hey, where do you find an opportunity to buy this? When we come back, check the initial balance, can't close in it, right? We have these 2 candles here that looked like some pretty strong sell pressure, right around 10:57 Eastern, 10:57 Central Time. We come back, check the initial balance, and this is where Hogue is saying, hey, better trade location is going to come later in the day. If we delete the first hour of trade, this is a trend day. All right, so a tale of 2 completely different trades. If you're a trend trader, maybe waiting for confirmation after that first hour is going to give you some easier trades, right? Because you can buy in here, but there's a lot of overlap, right? This to me in my own trading leads to, over management, where I'm thinking, hey, maybe this is not a breakout. But once we get the market moving in a direction, we have the anchored VWAP from the open, leaving that opening range, starting to act as a support where we're not trading on both sides of it. This is a trend day. Once we started to trend, let's measure these average pullbacks. Let's say you were still looking to short this. Why is that not working? It's all right. This is about a 15-point pullback here. This is a 25-point pullback here. Another 25-point pullback. We got a little bigger one here, maybe about 30 points. So once we started to trend, right, don't fight the trend. You saw the meme that was shared during Power Hour, but that, trying to short a bull market, it's kind of easy to get run over once it starts, right? And we've seen these kind of low volume, just infinite bid days over the last week or so. When this happens, there is not a lot of selling interest here, right? Some of these counter trend moves happened at major levels, right? We have a pullback here at 19,700, but we pull back maybe 30 points before we continue. So if you're going to counter trend trade, if you're looking to short this, just know that right now the opportunities to the short side are more limited. That doesn't mean that there aren't trades for you, right? We talked about the house account, shorting today and making money, but you got to identify that you're counter trend and have reasonable price targets for your trades. And then this close, we rallied 100 points, call it 80 points in the last 10 minutes of the market. Hogue is going to mention this as a late spike tomorrow, and he will explain late spike rules. So I definitely suggest listening into the opening call for how we may be able to use this as information for trades tomorrow. So we have this gap above, we have this late spike here, which the high of this spike is 19,854, and the low is 19,779. So somewhere in this spike may present an opportunity. I'm going to be listening to Hogue tomorrow to see what he thinks about this. All right. That's about it on the NASDAQ. I do want to switch over to the ES real quick and talk about the ES. And that gap, right? So pretty much the same idea on the ES. We're above the 20 and the 50 moving averages on the 30-minute, above the 200 as well. This market is starting to trend up, right? Or not even starting to trend up. We're in the middle of a trend right now. The ES, unlike the NASDAQ, closed above this gap that we had, again, from July 23rd. The gap in the ES was 56.02 at the highs, 55.85 at the lows. And we closed above it, right? That 5600 level was a major psych level, right in the middle of that gap. Once we started to close above that, the ES is pushing. So to me, the ES looks like the leader right now on the higher time frames. And we are not very far from an all-time high in the ES. Nick, get your air horns ready. We are less than 100 points. Less than 100 points away from an all-time high in the ES. And with the expanded ranges that we've been seeing, they are starting to contract a little bit. That ATR has come down just a little. Let me see if I can put an ATR indicator on the chart here for the daily. Daily ATR came down a little bit. Now we're at around 90 points. So we would need 2 ATR days to the upside, maybe 1.5 to see an all-time high. But it's right there, right? Literally 2 weeks ago, we were talking about, hey, the markets are selling off. But you heard Peter Tuchman today on TopstepTV saying, that was an opportunity to buy. It looked pretty scary, depending on what time frame chart you're looking at. But Coach Paul and I talked about this a little bit as well. We'll have him on tomorrow so we can discuss it a little more. But on a higher time frame, if I remove these drawings, these are those same moving averages, a 20, 50, 200 moving average. If we look at the 200 moving average on a daily, the last time we touched it or traded under it was October of 2023. We came down, checked it, but didn't even trade under it. So it looked scary, but from a technical perspective, we are still very much in an uptrend. And, of course, anything can change the markets, but it looks like this was just a healthy sell-off and back to the regularly scheduled buy program. Coach Paul, could be tomorrow. Absolutely. If we have a range expansion day, we don't have much on the calendar again until later in the week. So if we just continue to slow grind up, it very well could be tomorrow. We got a question from TMB. Hey Jay, that initial pullback at 10:20 Eastern time and 12 p.m. seemed to be the only dips today for bulls. Did you have the same concern today? So 10:20 and 12 p.m. Let's look at it. So 10:20 is right here. And you mentioned 12 p.m. So right about here. Yeah, those were really the only two. And from a playbook perspective, those are some of my favorite trades, right? Where we see volume come in, it's a counter trend move for volume, right? Where we're trending up, especially that 12 p.m. move that you pointed out. We're starting to trend up at that point. We see volume come into the sell side, but then that volume fails. And what that means is, we saw selling for 2 3-minute candles. We came down. It just so happens that we bounced right off the 50 moving average on the 3-minute chart. I don't have this up when I'm trading, but you see it happen all the time. But that volume gets absorbed, right? So we see sellers try to push price lower. Once we get a close, and we've talked about this before, but you see this heavy volume here? And that's one of the biggest volume candles that we have on a 3-minute chart outside of the open. That selling tried to push price lower. We'll frame out that candle. Once they failed and we get a close outside of it, just think about who might be in this candle, right? If we're seeing people sell to open a position, which means they're looking for the market to go lower. Once we get a close outside of that candle, what are these sellers thinking? right? At some point, if you're a bad seller, you got to become a buyer, and that's what pushes price higher. I heard that mentioned on Topstep TV today, where, and Coach Paul says it all the time, losers move a market. If I'm shorting this and price does not go lower, I have to close that position eventually. Especially if I'm a shorter time frame day trader, we got to close, and that's what fuels the rally higher. Right? Obviously, we're going to have some buyers come in here that are, buying the market to open a position, and they're gonna, when they sell to close, that's when we'll see that selling come in. But once we get a close outside of that volume, and I think we've pointed this out a few times now, and I'm going to frame out those two candles. Here's the 12 o'clock you were talking about and the 10 o'clock sell-off. Look at it. Once we get a close outside of it, and we've talked about this trade before, you could buy it down here, but we don't get to see the market this way, right? We see the market like this. So what's to say that this selling just doesn't continue at this point? You could read order flow, you could be reading time and sales to determine that, but a higher probability, maybe lower risk to reward trade is waiting for a candle close outside of that range. Maybe I can risk the lows of that candle now, where the high of this candle was 55.89, the low was 55.75. So it's 13 points. If that's expensive, micros are available as well. But that's a market generated stop in that spot. He who sells He who sells what isn't his buys it back or goes to prison. There we go. So you have to close your positions eventually. And just a really nice rally up here. So I removed the drawings that I had on here, but the ES closed that gap that we had on the 30-minute chart, 100 points from the all-time highs. Again, can be as early as tomorrow, or it can't, right? Maybe we sell off tomorrow. We don't know. And I don't want to try to guess what's going to happen. But there's a case to be made for both sides, right? I don't see a reason to really sell this market right now. If the market gives me one, then of course I'm going to go with the flow. But right now the flow is to the upside, right? On a higher time frame, on medium time frames, shorter time frames, everything is saying to the upside. I'm not going to try to fight it. But also you don't want to just blindly buy it either. Trade location still does matter, where you can get the direction of the market right. But if you don't trade in the right locations, can still lose money on the day, and we don't ever want to be in that position. Personally looking for institutional shorts puke out tomorrow. So Elvis, if that's what you're looking for, that's gonna give us a pretty nice rally, right? I'm gonna mark out some levels tonight and put those on the Topstep daily levels, but we do have some big selling that came in to start this move. So I want to see exactly where those levels were. Mark those out, and then do exactly what you just said and what we just did on a smaller time frame, right? Here is back in July 18th, we have a 56.55 at the high of this 30-minute candle and 56.23 at the low of it. Some pretty big selling came in there, right? If we start to get candle closes above those candles, which we started to trade in right now, right? We closed in that candle. I'm leaving that level on my chart. 56.55, 56.23 at the lows. This is going to be an important area. If we start to get a close above that, exactly what Elvis just said. If any shorts are still holding, they're going to start buying above those highs and then push us even higher. So good stuff, Elvis. Anything else on the ES before we continue? Or the equities at all? If not, we're going to move on to gold and then crude oil. Also, so you guys know, we do have Dr. Brett Steenbarger on Topstep TV tomorrow, 12 p.m. Central Time. Dr. Brett, there is going to be an Ask Me Anything. So if you're watching Topstep TV tomorrow, they're going to put the link out in the chat for you to ask Dr. Steenbarger any of your questions. I would suggest getting a question in there if you can. I may even submit one myself, but I know I'll be watching that segment, taking notes. It's always great to have one of those trading psychologists on. We have Jared Tendler on last week, and Dr. Brett has been a guest a few times on Topstep TV, so I know it's going to be another great session. All right, let's move over to gold. Gold made new all-time highs. Made new all-time highs in gold. We talked about this a little bit last week as well, right? What decision is gold going to make? Are we going to sell off below 2,500 or make new all-time highs? We said we could not stay in this range forever, right? 25.20 at the highs, 2470s at the lows was that range we were looking at. And once we started to break out, we got the 20 moving average above the 50, above the 200. We got a nice trend Friday into today. Today didn't really continue the trend. We made a high right on the Globex open. And this is where I made a mistake trying to buy this, where we had the high of the Globex open. We literally opened right below 25.50. The high of the day was 25.49.9. You see this happen a lot in gold, where we have these major psych levels. Anything that ends in a zero, gold will trade to it and then reject pretty strongly off of it. Where we traded up to 25.50, to the tick, didn't hit it. I wish I was watching the order book when it happened, because I wanted to see if there was an order out there that the market ran away from. Sometimes what you'll see on the books is on the offer, just too much size there, right? Somebody's trying to sell a 500 lot and the market's like, nah, you know what? No, that's okay. I don't want to buy that. And then we get that rejection off of it. So will be pretty interesting to see how the market trades for the rest of the week. We are still very much in this uptrend. The 20 and the 50 starting to braid around each other again on the 30-minute, but well above the 200 moving average, which is also above 2,500 now on the 30-minute chart. So gold is in a strong uptrend. The upside target, 2,600, just feels like a magnet at this point. Gold on the daily ATR on gold is about 40 points. So we're not far, right? We're 1.25 daily ATRs away from that 2,600 level. If we go straight to the upside, we know markets just don't go straight up and down, but gold is definitely in a trend today. This week. With that being said, today was a kind of a choppy session, right? We made that high. Let me take these moving averages off again. I'm going to throw the Topstep daily levels on. Yesterday's high was 25.48.4. We traded right above that on the Globex open. Literally the opening tick made the new all-time high, and we sold off. If I anchor a view up to that, we see sellers in control or kind of balance for the rest of the day, which if you're a range bound trader, this is exactly what you want to see. Anyone trade gold today? Anyone trade gold or any of the metals today and have a decent day at it? These are still pretty good ranges. Even though this is a range bound market, it's about a 20-point range in gold, which does provide opportunities to us, but it's about identifying where the extremes of those ranges are. The previous all-time high that we had was right around 25.22.6. So I'm going to put that level on the chart here. 25.22.6. Momentum matrix traders traded CL and gold today. If you traded CL with the trend, you had an awesome day today. But 25.22.6 was the previous all-time high. We know that was a level that came into play on Friday, right? We checked it a few times. We bounced off of it, tried to trade below it, couldn't hold under it for very long. And when we came back down to those prices today, during the New York session, didn't even trade to it. So this is definitely a support down here now in this 25.23 to 25.25 area, and a really nice 20-point bounce from there in gold. We will see what happens the rest of the week, but I would not try to fight this trend either. You heard Hogue talking about that as well. The market has decided a direction. Let it change before we start getting into, hey, this trend needs to turn around. Are there opportunities for short trades? There are. There was a decent one overnight last night. If you were trading during the London session with D, there was a decent trade from right around 50% of this opening print. And we see this play out time and time again. But let me remove some of the stuff I have on the charts so we can see it a little bit clearer. The Globex open first 30 minutes. We have the high of the range, again, 25.49, the low 25.40. During the London session, we trade to 50% of that range and sell off, and we trade right back up to it during the New York session this morning and closed in it. So again, these prices are going to be pretty important. 25.40, 25.49. What's up, Dolby? Market profile was definitely dominant in gold today. Gold was good to you during London, Lazy Lion. Nice. Tachi, yes, please hit those likes. If you like what you're hearing, if you like Topstep TV, make sure you go ahead and hit that thumbs up button. If you're already subscribed, tell your friends and family to subscribe as well. We are on the run to 120,000 subscribers for Topstep. So go ahead and hit that subscribe button. Joey Morgan, what is up? What's going on? Crude oil. Let's talk about crude. And annoying stuff. Yeah, the NASDAQ just never gave us an entry, right, during power hour. We were looking for a pullback, didn't happen, and then just ran 100 points without us. But that happens. It happens. It's better than getting in the trade and getting it wrong, I think. Depends on who you ask, I guess. Would you rather get in a trade? That's a good question. Would you rather get in a trade and lose it or look for a trade and never get an entry? I don't have the power to run polls yet, so put it in the chat. Would you rather be in a trade and lose or want to put on a trade but never get your entry? Which one is more frustrating? I think I'd rather get in and lose. Right, because we can measure our losses and put on another trade. Don't know till you bet. It's a good point, Dolby. That's a good point. In a trade and lose 100% SW. Yeah, right. Because at least then you're in the game, right? It happens so often that it's just like, hey, I picked out this perfect level, and then for whatever reason the market comes down to it. It actually happened to me in the ES today. The market comes down to it for whatever reason, you don't get in a trade, and then a lot of times what I've seen in my own trading is that leads to me forcing a trading decision. So it's better to put on a trade, be able to manage your risk, as long as it's just a trade that fits your playbook, right? You don't want to just put on something for the sake of putting a trade on. But being in the markets, that's why we're here, right? We're sitting at our desks, we're looking for opportunities, and when you see one, you want to take it. Have to be in it to win it, Dan. Yep. Let your statistics and the numbers work. I absolutely hate missing a trade. Yeah, get in and lose because I learned the most from my losses. 100%. Brad, Chris Bova, I'm the same, but I wish I had a lot more patience and discipline. Yeah, probably depends if you think you overtrade or not. That's a great point, Dolby. Yeah, that's a great point. If you overtrade, maybe it's better to miss trades. Where if you're overtrading and losses lead to you just shooting from the hip, then maybe it's better for you to miss trades and wait for those good opportunities. Really interesting, really interesting. Maybe that's a question we ask Dr. Steenbarger tomorrow, right? What does he see traders struggle with more, missing trades or not even getting into them? And what might lead to more tilt, missing trades or losing them? Here's crude oil. Let's look at crude on a 30-minute chart. We know we have this rollover gap that, whoa, this chart looks crazy right now. Let's take these levels off for now, and we'll take VWAP off as well. Crude has been in a downtrend since rollover, right? Before we had rollover, we saw that $80 level in crude that we know is a level that should not be spoken about because crude does not like to trade above it until it does, and then it doesn't like to trade below it. But we rejected above that $80 level last week. Then we had rollover, and since then we've been in a downtrend. Crude was one of our biggest percentage movers to the downside today, down 2.29%. I heard there were talks of a ceasefire and signing a deal, and we know that some of this move to the upside was caused by escalations, right? So when we see those things calm down, the markets are going to come back down. So crude has been in this downtrend. Again, the 20-50 moving average below the 200 moving average, and clear distinction between those moving averages. We can see when we trade above the 50, and again, this is the 30-minute chart. When we trade above the 50, we do get some candle closes above it, but once we settle back below, a really nice trend to the downside. Let's look at the first 30-minute open from last night. The high of that range is right around 75.63, we'll call it. The low is 75.20. We're going to anchor a VWAP to that. And again, that VWAP does not leave the range to the upside. Even though price goes higher, volume stays near the lows. right? However you want to look at this, moving averages, VWAP, simple price action. When we trade at these prices, buyers are not interested in buying above 75.50, we'll call it, and a really nice sell-off on a 30-minute chart. I actually traded a Topstep Combine on Quantower today as well, and only made money to the buy side in Crude. Did I have to work that hard? Probably not, but there were some opportunities to buy this at these lows. I think this was the first bounce I caught here, right around $74, and it was just a quick trade. I knew I was going counter trend, so I was not going to hold on to these trades. I heard Dolby, when he got on during Power Players, looking for an area to sell this, and I had just bought right around 74.40. Sorry, right around 74 even. The area you guys were looking to sell was right around 74.30, and I really like that to the sell side. So I'm looking at my trade like, hey, you know, if we don't get a close above that 74.30, you have to get out of this trade. And if we're looking from a high volume perspective, highest volume candle on the day was at 11:03 Eastern time. Sorry, 11:03 Central time. And the low of that candle was 74.27. I thought that was a really nice area to take a short, or a nice area to take profits on a long if you were in one. I could have held on to this trade and said, you know what, we need to rally all the way back up to 75. We could have, but I would have been wrong. So, you know, identify where your trades are in the market, whether you're counter trend or going with the trend, and going from there. I really do like, again, this volume setup here where we're framing out this candle. The market does not trade in here. We know sellers came in. At that point, that candle had took us below, the overnight low and the Friday's low. So this very heavy candle here, 74.72 was the high, 74.25 was the low. Took us below Friday's low here. Friday's low, which was 74.50, and the overnight low, which at the time was 74.58. So that's telling us that sellers are in the building, right? And from that point, we got another 80 cents in Crude to the downside. Where's the low in this? Where is the bottom of the barrel for Crude? Let's look at a higher time frame chart. And right now I'm seeing somewhere around 71. So the low here is 71.67. These 72s are in range for tomorrow, right? And again, of course, anything can happen, especially in Crude, right? If there is any news of an escalation or anything like that, we know this market could be trading above 80 tomorrow. It's that volatile when it wants to be. But for right now, if we're going with what the trend says, there's a little bit more room down. We are getting extended from this 20 moving average a little bit, where the 20 moving average on the 30-minute is sitting right around 74.50. We're trading at 73.80. So maybe a little bit of a retracement to that. But what we've seen is when markets start to trend, they hold that 20 moving average. Lower Crude prices is recessionary, says JD. Is there a way on Discord to share a chart with you guys? Discord for a review. Yeah, Elvis. So I have the Coach J chat in Discord. You can definitely share screenshots of a chart, or if you want to share your Topstep stats, you can share the link there, and we can talk about it there. So we will see what happens in Crude tomorrow. 72.50, 72. Anything in this area, I'm sure Dakota is going to talk about this on Slow Markets tonight, but we may be coming down to a demand area here in crude oil pretty soon. These prices we were trading, again, on this adjusted contract back in the beginning of August, but then I'm also looking at June, right? These lows in June around 72.49. Will be interesting to watch Crude in this area tomorrow, right? Do we bounce here? Maybe we look at a daily chart. On the daily, it's a little bit lower, right? On the daily, it looks like there's room down to 67. But of course, if we're going to trade 67, we need to sell through 72s first, right? So we'll take it level by level as it goes. But really nice sell-off in Crude today. All right. Any other questions? We are about 40 minutes into the session. Again, not too much as far as news goes to think about. We'll talk about the news later in the week. China is slowing demand in Crude as well. right? And that could all be, causing these prices to go lower. Again, the trend in the medium time frame is to the downside. Try not to fight these trends because they are pretty heavy. One more I want to look at. Let's go to one of the top percentage movers on the day. We haven't done a chart analysis of one of these in a little while. Nat gas is actually showing up almost 5.8% now. When Coach Paul gets on here, he does trade nat gas, from time to time, and we'll talk about these Sunday gaps. I don't know that we had a Sunday gap in nat gas. Actually, we did. I don't know why this happens all the time, but it does. We had a Sunday gap down, so we had the close around 129, and we did gap down. We opened right around 125, and I'll frame out that candle here. And again, same idea. Frame out the candle, we'll frame out the gap as well. The gap's going to be purple. Once we close that gap in nat gas, off to the races again, and a really nice shorter time frame uptrend, right? This is on a 3-minute chart. Really nice trade from here if we see some of these volume anomalies. And again, I'm doing this because you can apply this analysis to any chart. Let's frame out this high volume candle. This was 6:20 Eastern time. I don't know the significance of 6:20 Eastern time in nat gas, but somebody traded some volume around there, right? Once we get a close outside that candle, we can see we're testing somewhere around 50% of it and just a really nice trend up. I did take one trade in nat gas in that Quantower combine as well, and it was a short. I saw someone in the chat said, hey, nat gas is up 5%. I said 5% is a lot. So looking at the hesitation up here, I did take a short. Again, another counter trend trade, but I'm reading this as I don't know how much room nat gas is really going to run. Have we seen double-digit percentage days to the upside? We have. Not very frequently though, and I figured somewhere around 5% is a decent area to maybe look for a short opportunity. Do I think that the market is going to turn around and trend lower? I don't necessarily have an opinion on that gas, but from a technical perspective, it provided an opportunity where it looks like we're hitting a supply area. I took a short, took the trade off when it looked like it was hesitating to the downside. Coach Paul says we are over the 20-day simple moving average. I'll pull up a daily chart in nat gas. Not sure how many traders we have that traded it, but with it providing, with it being one of our biggest percentage movers on the day, it may provide some opportunities for you to trade. Again, if it's a new market to you, trade it in a practice account. Don't do it in a combine, XFA, live account. If it's your first time trading it and you're interested, do it in a practice account. Identify how the market moves, what news may affect it, and go from there. But from a technical perspective, like Coach Paul is saying, we are above the 20 moving average on the daily chart. The 200 moving average is right around $2.30, we'll call it that, in nat gas, which may act as a resistance. We'll go back to a 30-minute and we can see where some of these highs are in this 30-minute range. Looks like there's a little bit more room left to the upside, right around 2.3. One man Wolfpack, is this segment trading in the dead hours? So we cannot place any trades right now. One man Wolfpack, the markets are closed as far as Topstep accounts go. All of our trades need to be closed at 3:10 Central, but what we are doing is reviewing the markets for the day and prepping for the next session. It's good to do a recap to me when the markets are not moving, because we can slow down, see what happened, and prepare to kind of read and react. With some of these volume, moves that we're talking about, when you see it and you recap it enough, when you see it in real time, it makes it a lot easier to just take the trade. And you can say, hey, when I recap at the end of the day, I'm going to look at this setup and say, hey, that was the setup that we see all the time, right? Think about any athlete that is in the film room, right? Quarterback room. They need to read defenses when they're not having to make decisions in order to be able to make those decisions in real time and not have to think so much, right? Where you're just reacting. So that's kind of what we're doing here. It's why I like to do this when the markets are not moving, because we get to frame out opportunities. And then when those opportunities present themselves in real time, all we have to do is react. But thank you for joining, and a great question. Jay, this high volume candle draw box thing is super interesting. Never considered this before, but I'm looking at it on my charts now. Very interesting. So Andy, think about what it is, right? It's not just identifying high volume. The way I look at it is there was a market participant there that created that high volume, right? I was talking to a trader in the chat earlier today and said, the markets are 100% algo driven. If that's the case, then I personally, and this is just a personal opinion, we're not all algos, right? If I wanted to take 100 lot and trade it in the NASDAQ, I'm going to move the market. Whether I control the market from that point and decide exactly where it's going to go, maybe I don't have an account size to do that. But if I trade 100 lots, I'm going to move the market. And if I trade 100 lots and I have the capital to defend that position, if I'm still holding that position when the market gets back to my price, I'm going to defend that position if I'm still in it, right? If I buy, let's just go to the NASDAQ real quick. If I buy 100 lots at 19,780 and the market trades back down to those prices, but I still haven't finished the business that I'm conducting, right? Where I need to make some money to the upside on this position. When the market trades back to it, I'm going to defend that position, right? I'm going to put more capital behind it if I can. Now, does that mean I can hold the market there? Maybe it sells off and I lose on that position. But identifying where this higher volume happens, to me, what that helps do is identify where these bigger players are interacting, right? And now we can just read. There's a seller here. There's big selling here, whether it's one position, whether it's 100 traders, who knows? Whether it's an algo that executed a trade there. They sold and caused big volume in this 3-minute candle. Whether they were sellers to open or sellers to close. Think about it. A seller to open a position is selling because they want the market to go lower. A seller to close a position is selling because hold on, let me make sure I say that right. A seller to open a position is selling because they think the market is going lower. A seller to close the position is selling because they think the market is going to go lower. If I'm selling to close a position, that means I was long. If I'm selling it, that means maybe there's no more upside and I'm closing that position out because I've seen what I wanted, right? Maybe I bought it down here at 19,565, and as the market traded up to 19,665, I got what I wanted and now I'm selling that position. The way I'm reading this is, hey, that was high volume. Are these sellers defending this, or are they going to let price trade above it? Hopefully that made sense. I kind of stumbled over my words a little bit, but I think you guys get the point. We got a question from Marcio Teixeira. What is your option about standard deviations? What is my opinion about standard deviations? I personally don't use standard deviations in my trading. I know Anne-Marie does. And if you have some questions about it, she's on Strategy Lab all the time. I would ask Anne-Marie. I personally don't use standard deviations often. All right. Are there any other questions? Finding the aggressors, you need to follow order flow in specific zones or levels. Have a look at 55.16 tonight if we get there in the ES. Let's look at it, Elvis. 55.16 in the ES. Why is Elvis looking at 55.16? I can see where, well, yeah, 55.16 is the low of this late spike here. And let's just frame it out. Here is a candle relative to the time to the candles around it. This is a decently high volume candle here. The high of it being 56.18, the low being 56.13-ish. And then we kind of spiked out of here. So what Elvis is saying is there looks like a buyer that stepped in here to push the market higher. If we trade back to these prices, we can determine, hey, is that buyer defending this position or are they going to let it go? Origin of the move. There you go. Would you consider change in value or time more? TMB, I don't know if I understand that question. If you could maybe reframe it, but I think it's a good question. What else do we got here? Why do I use the 3-minute? It just helps me make sense of the markets, Larry. There's no specific reason for why I use it. I've compared it to boxing stats before. I'm a boxing fan. Boxing rounds are 3 minutes. It just helps me make sense of the market where it's not a 1 minute, where there might in my opinion, be more false signals, and it's not as long as a 5 or a 10 minute where I'm not waiting too long. For me personally, I use a 3 minute and a 30 minute, and I bounce back and forth between the two. Most of my trade entries are going to happen on a 3 minute, and then the overall analysis is going to happen on a 30. But I don't see any other questions in the chat. If you guys do have anything, make sure you hit me up in the Coach J chat in Discord, and we can talk there. Some pretty active traders in there as well. Are you changing time slots? We may change time slots. So we did take that vote. We're planning on taking probably a few more votes. The initial vote that we had was to change this segment to 5 p.m. Central Time, where the markets are open again. And I understand why, right? There's opportunities to trade when the markets are open. So we may change it. I think we're going to test it out next week potentially. But you guys will know that. We'll put it out in the programming before we just go ahead and change it. But thanks everyone for joining. Like I said, Coach Paul will be on tomorrow. Trade well. If you decide to trade, during this Globex session open, slow markets into tomorrow, not a lot of news on the calendars, but make sure you manage your risk. Try to identify where the markets are moving and how they present opportunities for you for your trading. Manage your risk either way, and we will talk to you all tomorrow. Everybody have a great night. Thanks.